It is my distinct honor, if I can advance my slides here, to introduce you to Gene Marks, our featured speaker for our concluding session this afternoon. And thank you, Gene, for joining us today. Let me give you a little background about Gene. He's a past columnist for both the New York Times and the Washington Post, and writes regularly for The Hill, the Washington Times, the Philadelphia Inquirer, the Guardian, Forbes, and Entrepreneur magazine. That's a lot of writing.
It's a lot of writing, Joe.
You've also, Gene, written 5 books on business management geared towards small and medium-sized companies. Gene has appeared on MSNBC, Fox News, the Sirius XM Wharton Business Channel, where he talks about financial, economic, and technology issues that affect business leaders. Gene helps business owners, executives, and managers understand political, economic, and technological trends affecting organizations, and most importantly, suggests actions key to continued growth and profit. He's the owner and operator of the Marks Group, a 10-person firm providing technology and consulting services to small and medium-sized businesses. And sometime before that Marks Group ownership, he still is, I presume, a talented CPA, where he spent 9 years in the entrepreneurial services arm of KPMG in Philadelphia, where he was a senior manager. Gene, it's a real honor to have you with us this afternoon. Thanks for taking time from your busy schedule to talk to us.
Joe, thank you very much for having me here as well. And just confirming, Joe, you guys can see my slides, correct? I've shared them and they are up there?
We sure can.
Fantastic. All right. Well, thanks so much. And guys, everybody, thank you so much for hanging around later in the afternoon to join me for this presentation. Joe tells me I can speak to you for about 3 hours. I hope that's okay. I'm just kidding. We're going to go for about an hour, not even that. So I'll make sure to get you out on time as well. And listen, this presentation is all about you as people that are leaders and owners and managers at credit unions. I am a credit union member myself here in Philadelphia. I've been a longtime fan and supporter of credit unions, and I think that what credit unions do provide a great service, not only to individuals but for businesses. And my coverage, what I write about, is small businesses, small and medium-sized businesses. And I know a lot of your members are small and medium-sized businesses. And I also know that you're looking for more members that are small and medium-sized businesses as well. And so because of that, what I wanted to discuss today is some of the biggest issues that are happening right now that are not only affecting your prospective members and current members, again, your small and medium-sized members, but also your business as well. Because listen, you guys are running businesses here. Credit unions are businesses. You have payroll to make, you have money to make, you have operations that you've got to fund, you've got businesses to run. And these are some of the biggest issues that are going on right now. And more importantly, what I want to do is I want to share with you what some other people in other credit unions, as well as other small businesses, are doing to address these issues, to sort of attack these issues. So we're going to go through them. These are things that are happening both politically, economically, a little bit of technology. So I have a lot of information to share. You can see on this front slide, as I have getting started, that you can, by all means, request of me, just email me when I'm done, and I'll be happy to send you this full PDF deck because I've got a lot of information that's in here, and I am more than happy to answer any specific questions that you may have. So please do that. I'm going to jam-pack this presentation with a lot of content, so you can email me whatever questions that you have afterwards. Now, just to make sure you're staying awake, though, because I know there's a lot of stuff going on and it's sort of late in the day, I'm going to be asking you guys questions as I speak, just so the information is kind of sinking in or whatever, and just to make sure that's getting through. Don't worry, when I ask you the questions, you're not being tested on this, and they're really not that hard. Okay. I mean, I'll give you an example. I like true false questions. Like for example, this one, true or false. In 1969, the Apollo 11 astronauts were required to fill out customs forms before returning to Earth. Do you guys think that's true or false? Now, I know I can't hear you, but you think about that yourself. Let me tell you what the answer is. It's actually true. This is the actual customs form that the astronauts had to fill out before they returned to Earth. It literally said that they departed the moon on July 24th, 1969. Everything's relative, right? We have immigration problems now. We've had them for decades. We've had them for hundreds of years. How about another one, okay? Just before we really get into it. How about this one, true or false? In 1974, so that is 3,000-year-old mummy, could be flown to Paris for necessary repairs, the Pharaoh Ramses II was issued a valid passport. Is that true? Believe it or not, it is. This is the passport that the Pharaoh was issued. And by the way, just in a related story, that's Keith Richards. Okay, finally, true or false, and then we'll get to business. 10% of Americans think that chocolate milk comes from brown cows. Do you think that's true? Do you think that's false? It's actually a trick question. It's false. It's 7% of Americans think that chocolate milk comes from brown cows. Okay, can we get to business here? Let's get to business here, okay? The first order of business that we want to talk about is about the recovery and the economy. Now listen, you guys work for credit unions. You are managing credit unions. I am your member, okay? I am looking to you as my financial advisor to help me figure out what is going on. Now, we all know that we're in a recovery, but the big question that goes going back and forth with jobs or with supply chain issues is how strong is the recovery going? Because these decisions, how strong is making it will impact the decisions I have to make as a business owner. And the decisions are whether or not I should be hiring, can I afford to hire, can I afford to invest, can I afford to spend? So you as my financial advisor, I'm kind of looking to you to get some help. So, when you look around and you read in the media, which is where I do a lot of writing, you hear a lot of sort of, contradicting stories. You've got people saying the unemployment rate isn't going to return to the pre-COVID levels for a decade. You have people claiming that jobless claims have slowed just recently. Others are writing that the 2021 recession will be long and lingering. This was back in March. Then, of course, you've got other people writing that the economy is going to be growing at the fastest rate since 1999, or that this could be the best year on record for businesses, and other firms like Goldman Sachs predicting a low unemployment rate is down to as little as 4.1% by the end of 2021. It's difficult out there. We're hearing a lot of reports in media that are saying one thing and some that are saying the others. You've got economists that are saying one thing and others that are saying something else. Smart people, the economists, the academics, the pundits, the people in the media like myself. But let's face it, we all went through the 2008 recession together, and we can all agree that when it comes to all of the experts and all the pundits and all the things, the people that say that they know what they're doing, we understand that they really don't know what they're doing, right? I mean, we know that we've never been through a pandemic like this before, so it's very, very difficult to figure out where we are going and what's going on. So what we need to do as financial advisors to our members is we've got to track certain metrics, real-time data that is telling us where the economy is going. I have 5 of those metrics that I'd like to share with you now. This is the data that I am looking at either every week or every month to really track the recovery of the economy, and I strongly suggest that you look at this data as well. The first metric that I am looking at is the Open Table State of the Restaurant Industry. Now, I don't know how familiar you guys are with Open Table. They're a mobile app. They're very popular around the world and very popular in this country, particularly in bigger cities. And you make restaurant reservations on Open Table. Well, what the people at Open Table have been doing since the beginning of the pandemic is they have been tracking and sharing those restaurant reservations. So if you look at these restaurant reservations, this is the summary of restaurant reservations in this country since pre-pandemic, which is the 0 level that you see all the way to the left, all the way to the last week. The black line that is in the middle is the national average. You can see that the black line national average is running almost close to pre-pandemic levels. Some areas in the country, not surprisingly, New York, Pennsylvania, even Illinois, running behind the national average. Other areas, not so surprising, Texas, Florida are actually running above the national average. So that's very, very good news. But the good news is here, when I look at this, because I've been tracking this all year, is that we are finally catching up and getting our restaurant reservations, which means our consumer spending, our restaurant spending, almost back to pre-pandemic levels. This is a metric that I continue to watch, and of course would be concerned if it started dropping off at any time. So the first metric I like is what's going on in the restaurant industry. The second metric that I like to follow is that the TSA. The Transportation Security Administration follows travelers through the nation's airports, and they report on that data every single day. This is the most recent data of travelers through the nation's airports. Ignore the blue line down below, because that was from 2020, and we don't even want to talk about 2020 anymore. Focus on the red line that's in the middle, that's 2021. The dotted line tells you the percentage change. Right now, we are at the 70% level of travelers through the nation's airports that we were at this time last year. And these numbers go all the way through June 1st. So they're pretty current. So that's also good news. You can see they have been significantly trending up over the past few months as more people have been getting vaccinated. That's great for the travel industry, for the leisure industry, for the conference industry as well. It is another metric that I keep a close eye on to make sure to see how the recovery is progressing. And it seems to be progressing very nicely on the travel side. So that is another one that I like to look at. So I look at restaurants because that's consumer behavior, real data every week. TSA travelers, also behavior of travelers, both for leisure and for business, and that information is coming out every day. I also look at the Institute of Supply Management's Service and Manufacturers Business Conditions Index. Now, I'm not sure if you know what the ISM is, but the Institute of Supply Management is basically an organization of purchasing managers. They have thousands of purchasing managers that belong to this organization all throughout the country. I mean, basically, to be a member of the ISM, you've got to be a certified purchasing manager, and I'm pretty sure you have to look like this, okay? All right, so if you're a member of the ISM and you're a purchasing manager, what the ISM does is that they poll their members and they ask them a few simple questions, the obvious ones being, what are you purchasing? And how much are you purchasing over the next 30 or 60 or 90 days? These are the numbers for the manufacturers in their industry. The numbers themselves, the purchasing index, are extremely strong. Any amount over 50, which is this line in the middle, is growth. Anything below the number 50 is contraction. Right now, if you look at that blue line that's all the way up on the right-hand side, we have not seen these levels since the early 1980s. This is data through the end of May. So it's basically a strong indication that it's a monthly metric that's telling me that purchasing managers at manufacturing companies are buying. There is a strong amount of demand. Now, whether there's supply for them, that's a whole other issue, but there's a lot of demand. By the way, the same thing on the service side. Anything below 50 is contraction. Anything above 50 is growth. You can see the service level index is the highest that it's ever been in the recording of these ISM services index. Again, extremely strong demand for purchases, demand in both the services and the manufacturing sectors. So that's also really good news. So I've seen good news from the Open Table State of the Restaurant Industry, good news on travelers, good news on manufacturing. Not as good news in small business confidence. And I like to measure this every month. Small business confidence is measured by the National Federation of Independent Businesses. They look at these numbers, they poll their members. 30 million small businesses operate in this country. They employ half the people in this country and contribute more than half of the gross domestic product. So if small businesses are doing good, the economy is doing good. This optimism index, this was through April. You can see that it's wavered a little bit up and down. It was trending up as of April. May's index just came out yesterday, and that trended down a little bit. Still at levels that we saw back in 2016 and 2017, but there's less optimism among small businesses. Small businesses right now, although a lot of them are getting back to work, which is good news, they're struggling with labor issues and supply chain issues right now. And plus, they're a little bit nervous about some of the changes going on in Washington, and that's also causing a little bit of concern and uncertainty. So optimism of small businesses, not bad, not as good as it was during the Trump administration, but still fairly strong. So I'm not in any kind of panic mode yet, but I am keeping a close eye on this metric once a month. Finally, I like to look at really two metrics that are in the construction industry: home builder sentiment and architectural billings. The architectural billings index has been going up significantly over the past couple of months. And by the way, this index is produced by the American Institute of Architects, and it is for commercial architects. So you know how you're hearing all about how we're not going to have a lot of commercial buildings, or people aren't coming back to work and there's no office space? That is not what the architectural billings index is showing me. Because remember, these architects are doing their work in advance of construction happening. And what I'm seeing here is that architects are laying plans for a lot of commercial buildings. Many of them are warehouses because of the growth in e-commerce, but a fair amount of them are also office complexes around the country as well. So don't get too caught up in the whole work from home thing right now. Yes, a lot of companies will be having work from home, but certainly not going to be putting a lot of real estate developers in the real estate industry out of business. So strong numbers there. And then also the home builders, also extremely strong. We know there was a shortage in housing inventory out there. I'd like to match to see that the National Association of Home Builders, they take the sentiment of their members every month. I like to see how they're doing because these are personal, for individual homes. Also historically strong home builders sentiment. These are the metrics that I look at, guys. I mean, these are the five. They're based on real-time data, daily, monthly, and weekly. They're based on certain industries that I'm following: restaurants, travel, manufacturing, service, small businesses in general, and construction. That gives me the pulse. And by the way, even when the pandemic, the recovery, we are in that recovery and all that's good. 5 years from now, you should still be looking at these numbers because these will be the leading indicators if there's any trouble times ahead. These are the kind of numbers I like to look at. I don't follow, I hear GDP, I hear unemployment rate. That's fine. These numbers tend to be a little politicized. They're subject to many revisions. So, I do listen to them, but they are not the real numbers and metrics that I'm using to advise my clients as a CPA, and the numbers that I'm using to gauge when I should be spending money or making investments. These are the metrics I'm following. The bottom line is, though, is that you do need to have metrics that you follow. You are a financial advisor. You are at a credit union. I am looking to you for financial advice. You need to be telling me, is it time to spend? Is it time to invest? Is it time to hire? I'm relying on you for that information. Now, I share with you my 5 metrics. There are plenty of other great metrics that are out there. I mean, some economists I know follow recreational vehicle sales because when recreational vehicle sales are up, that's a good sign that we're out of a recession. Others, I have one guy that's a friend of mine at Columbia University. He follows pet thefts. The number of pets that are stolen in New York City, because he believes that when pet thefts go up, then people are selling pets on the black market. That's a sign of a bad economy. I know that's a little extreme, but I'm just telling you that's like the metric the guy follows. I know a number of economists that follow the lipstick index. Now, I'm not sure if you're following this, but in lipstick sales tend to go up in a recession and then fall in good times. Why? Because lipsticks are relatively inexpensive. So when times are tough, women tend to spend, they spend less on cosmetics or higher priced perfumes, and they buy lipstick, makes them look good. Now, of course, this index was turned totally upside down during COVID. I mean, my wife is still wearing the same pair of sweatpants that she put on last March in 2020. So the whole lipstick thing is what didn't really count when we're all working from home, but it's still an interesting index in the future. You know what the most fascinating index is? This is an index that's followed by Alan Greenspan, the former Fed chief. What does Alan Greenspan follow? He follows the sale of men's underwear, literally, because he knows, like a lot of men do, that when times are good, we buy more underwear. When times aren't so good, we might use them for a few more days extra than we normally do when times are good. That's what Alan Greenspan does. You got to have a good metric. So how do you find these metrics? Where do you go to get them? Well, these are the economists that I follow. If you notice them here, and again, email me. I'll give you my email address later if you'd like to make a note of some of these people. They have all the metrics that they have that you can follow, as well as a whole bunch of other stuff. And by the way, some of these people lean to the left, some of these people lean to the right. As a financial advisor, as a person, it's good to hear points of view from people of all sides of an issue. And the economy is not a science, it's more of an art. So this is something that you want to get different opinions from different people. And these are the economists that I like to follow. By the way, one other site that I like to follow when we talk about the economy is a site called Shorpy.com. Shorpy.com is a site that digitizes old photos. So even during the height of COVID, when things were really scary and really depressing, Shorpy puts things into perspective. Like when my employees were complaining about the state of my office, I could show them this picture and say, listen, our office is a heck of a lot better than offices 100 years ago. Heck, you're working from home now. We got a Keurig machine. We got the internet. All is good, right? Whenever I get a call from like the principal of my kid's school complaining, saying my kid's got detention or potential suspension, I always realize, listen, my boys have always been getting in trouble. By the way, girls have always been getting in trouble, right? Still, people playing on the internet today, they were dressing up cats 100 years ago. I'm still in search of the perfect employee, and Sherpa reminds me that that employee is still out there. And actually, I really don't even know what this picture is, guys. It's like a kid smoking a cigarette with a chicken. So if you know, maybe you can email. I've looked at this picture 100 times. All right, anyway, listen. That's what you need to know about the metrics that I follow. So let me test you a few, okay? True or false? All economists are in agreement that there will be a V-shaped recovery. Do you think that's true or false? Yeah, it's false. We know why, right? You should know about it now. Yeah, this is why, okay? The economists, as smart as they are, they're just making their best predictions. And I can give you 10 economists that think we're going to have a strong recovery, and I can give you another 10 economists that think the exact opposite. You've got to follow the metrics yourself and advise your members as to what makes the most sense. True or false? TSA traveler data is one indicator to measure economic recovery. True, among the 5 that I like to follow. Real-time daily data is what you want, not waiting for a long period for some government issued report that's ultimately going to be revised. True or false? It's important to follow economists on both sides of the political aisle. Of course, that's true. True or false? Cutting tennis balls in half allows you to save space. Of course, that's true. I mean, come on, it's obvious, right? You cut them in half, you save space. And true or false? The Cookie Monster dates back to biblical times. Yeah, believe it or not, that is 100% true. Yeah. And finally, true or false? The diploma on the wall in Michael Scott's office is from the University of Scranton. Now, guys, sorry, it's false. It's just a certificate of authenticity that he's the proud owner of a quality Seiko timepiece. Okay, and I guess at this point, you're more interested in what this dog is doing than what I'm talking about. Okay, well, I still have another half an hour to go, so you're going to have to bear with me, okay? So what are the actions that you want to take for both you and your members? Big one is having a few key metrics, right? I like to follow these metrics. You've got to have your own metrics. They shouldn't just be what's published in the major media. They should be more important than that. They should be more relevant than that. These are the metrics that you want to be looking at, or have a few good economists that you follow as well. Maybe they've got some metrics that you think are more worthwhile. You're a financial advisor, just like me as a CPA. Your clients are relying on you for advice. You also want to be following these metrics because they will determine your investment and your hiring and your spending decisions in the future. Okay, now let's talk about your people. Labor disruption is a big issue in this country. Excuse me, a lot of companies are suffering from this. We want to retain our good people, but we're also looking to find good people as well. But we also have some challenges ahead of us over the next couple of years. And I want to make sure you're aware of these challenges, not only for your business and your credit union, but also that your members are aware of these challenges as well. Now, does anybody here know who this guy is? Do you know who this guy is? Any idea? This guy is Marty Walsh. Marty Walsh is our new Secretary of Labor. He was appointed and confirmed by the Senate just a couple of months ago. He was formerly a mayor of Boston. He was formerly a state house rep in Massachusetts, and he's a longtime member and president of his local union in Boston, Massachusetts. And no, contrary to what some people think, he did not appear in The Departed, okay? That's completely a myth. But Marty Walsh is serving in Washington. Marty Walsh is serving in Washington right now, and he is championing a lot of causes that are championed by President Biden that are going to have an impact not only on our businesses, but on our members as well. And let me explain to you what some of those issues are. The first, of course, has to do with minimum wage. Now, I am not expecting to see an increase in the national minimum wage to $15 an hour anytime soon. The Senate rules do not allow it to go through the reconciliation process, which means it needs a full 60 votes to be passed. And there's too many opposition votes to get it passed. There are some good sides, and a lot of people believe that increasing the minimum wage is a good thing. It will increase wages for a lot of people, increase spending. There's a lot of people that also feel that increasing the minimum wage will put undue hardships on businesses and also is unfair, because how can you make a business in Alabama pay the same minimum wage that a business, say, in Los Angeles is paying? So the debate's going to continue to go on. However, be aware of this. Even though I don't expect to see an increase to $15 an hour, there is broad bipartisan support for an overall increase in the minimum wage. And I am seeing, and I am predicting that we will see an increase in the national minimum wage, something in the range of $11 to $12 an hour before the next midterm elections. Now, this may not affect you because at the credit union, you might not have a lot of people getting minimum wage, but think about your members for a moment and think about the impact that this has on all of their wages. If you have a member that's paying somebody 15, 16 bucks an hour because the minimum wage is $7.25, well, guess what? If that minimum wage goes up to say even 12 bucks an hour, now that same experienced employee is only getting a few more bucks an hour than an entry-level person. And that person is going to be like, hey, we need to be paid more, which means that an increase in the minimum wage puts an overall pressure on the increase of wages all throughout a company. And that's something you should be advising your members about to be very much aware of. The other thing you want to make your members aware of, and you should be aware of, is there will be an increase in overtime wages. Right now, if you employ somebody and they're making approximately more than $35,000 a year and they're on salary and they're not supervising anybody, they're just, they're not a salesperson, well, you don't have to pay that person overtime. Even if they're answering email on a weekend or working more than 40 hours, they're salaried, they're making more than $35,000, you don't owe them overtime. Well, Secretary Walsh plans to increase that to the limits that the Obama administration proposed, which is $47,000 a year, which means that if you or your members have any employees that are making up to $47,000 a year approximately, those members, if they're salaried and they are not supervising anybody, they're entitled to overtime if they work any more than 40 hours a week. Now, will those employees, will the Department of Labor come after you if you're not doing that? That's unlikely. Will your employees report you to the Vermont or the Federal Department of Labor? Yeah, that's a lot more likely. So you want to be very much aware that overtime wages are going to be going up, I believe, sometime in the next year. This is something that the Department of Labor can go through without a congressional vote. So if you have employees that are on that bubble, you need to make sure that you are addressing them. Number 3, there is something called the PRO Act. It was passed by the House a couple of months ago. It has not reached the Senate yet. It's being held up, but parts of it are included in the president's infrastructure plan. It affects your business and your members' businesses in 2 ways. Number 1, it makes it a lot easier to form unions. So if people want to have union activity on your business premises during the business day, form unions for all or even a portion of your employees. The PRO Act will allow them to do that. The second thing that it allows people to do is it changes the definition of independent contractors. It follows the same precepts that were set by California's law, AB5, which passed a couple of years ago. Under the PRO Act, if you have an independent contractor that's generating revenues for you, or if your member has one that's generating revenues, that independent contractor would be classified as an employee, which means that it's entitled to your employee benefits and you will be subject to employer taxes. Now, what do I mean by generating revenue? My business, I'm a CPA firm and a technology business. Sometimes I hire an outside tax expert to do some work for a client, and I pay the person 50 bucks an hour, and then I bill them to a client at 100 bucks an hour. Under the PRO Act, that person would have to be classified as an employee. So think if you've got people in your business that are not providing, that are providing like core functions of your business, revenue generating functions, those people will be subject to that changing classification. So be very aware that could very well be coming if the infrastructure bill does pass. Paid family leave is also very much on the table right now. The Biden administration wants to ultimately have everyone who's taking unpaid leave for up to 12 weeks that employers are doing under the Family and Medical Leave Act, they would get paid leave up to $4,000 a month for the time that they have to miss to take care of a sick relative or themselves under the Family and Medical Leave Act, paid leave. I actually think that's a good thing. So even though I put, labor costs are going up, paid family leave basically means that small businesses, your members that are running small businesses, they can have their employees take that time off. If it's unpaid, they don't have to feel the obligation to pay them because the government will pay them, and kind of levels the playing field a little bit because now small businesses can have that benefit available to them that really only a lot of big businesses are providing to their employees. So I think that's actually a good thing. Another thing that you want to keep out, keep an eye on. Finally, when we talk about labor costs going up, Secretary Walsh is looking to have non-compete clauses waived in agreements. So you have an employee agreement, an employee wants to leave your company to go somewhere else, like a competitor, that would be okay under new rulings from the Department of Labor. There's going to be some big changes coming to OSHA. Now, that might not affect your office as a credit union, but it could affect some of your members. Big budget changes, about 12 to 15% that are proposed, and some potential changes in 401ks in the future as well, where you get tax credits instead of a pre-tax deduction when you are using a 401k plan. It benefits lower and moderate income people over higher earners. So it is another thing that you want to be aware of. All of these things are going to be affecting labor in the next couple of years, and you just want to make sure that you're on top of them and taking some actions. Now, you asked me, like, what kinds of actions? Well, all I can do is share with you what other business owners around the country are doing to take actions on these kinds of things. So number one, they are maximizing this year's stimulus incentives. Now, I want to make sure that you are aware of this. I know you're like, oh, we're a credit union. These are like tax credits. We don't pay taxes. Yeah, you do. You pay payroll taxes, and so do your members, which means that the employee retention tax credit is a big deal for you and your members. The employee retention tax credit expires at the end of this year, but it's pretty huge. It's up to $7,000 per employee per quarter in 2021, and it's less in 2020, but it's still a substantial number for 2020. You don't even, the eligibility is one where you were either fully or partially shut down in 2020 or 2021. So if you had to send everybody to home to work, you are eligible for the employee retention tax credit. You take this credit against the payroll taxes you owe, not the income taxes. And if the credit is bigger than the payroll taxes you owe, you get a refund of the money from the government. And here's the other thing. If you didn't claim the tax credit in 2020 and you think, maybe I was eligible in 2020, you can go back and amend your payroll tax returns and still claim the employee retention tax credit. So if you're not familiar with all this, talk to an accountant or talk to a payroll company about this. Even just as importantly, give this advice to your members, because your small business members or prospective members will really think highly of you if you bring to their attention that this credit can turn into cash coming back into their bank account that they have the ability to get. They should be aware of it. They will think highly of you for doing it. Take advantage of the employee retention tax credit. The Families First Coronavirus Response Act tax credit is another thing. If you or your members give time off to your employees that are affected by COVID, and that includes that employees that need to take time off to get a vaccination shot or recover from any kind of a response to the vaccination shot. If you pay them for that time off, you can get the credit back, their payment back as a credit against your payroll taxes. So that's another incentive and advantage for you as well as for your members. There's a COBRA tax credit. If you have any employees that are unemployed, or if you have members of employees that are unemployed and they're paying their COBRA, the health insurance, employers now can pay the COBRA on their behalf and get the money back from the government in the form of a tax credit as well. So that's another incentive that employers have. And finally, and this is a big one, this doesn't apply to payroll tax, it applies to income tax. So it doesn't apply as much for you at a credit union, but hear this for your members. The Work Opportunity Tax Credit. This is a credit of up to $9,600 that your member can get per employee they hire if the employee was off of welfare, out of prison, or most importantly, unemployed for more than 6 months. So think about this. You tell your members before they hire a new employee, do the Work Opportunity Tax Credit calculation or ask their accountant to do it for them. Figure out what the tax credit is and then go back to that prospective employee, give it to them as a hiring bonus. It's money that's coming back to you in the form of a tax credit anyway. Share it with that prospective employee. that could be the difference between hiring that employee or losing that employee because somebody else is offering that tax credit as well. So it's a great incentive to help you do hiring bonuses, the work opportunity tax credit. So maximize all of those tax credits this year. They are going to be expiring at the end of this year. Another ways to invest in labor costs is investing in technology. And I'm seeing this all over among my clients. Bill.com, for example, allows you at your credit union or your members, you tell your suppliers, don't mail me invoices anymore, email them to Bill.com. Bill.com will scan any invoice that's received and automatically put it into your accounting system. Your members can do the same thing. It works with just about every accounting system. There's room for you to review it first before any damage is done, but you can code and have this all automatic so that you're really eliminating a lot of accounts payable work being done by people in your office, which improves productivity. Maximize the artificial intelligence capability of your different applications. And here's what I mean. Your cloud applications, your HR platforms, your CRM platforms, your project management platforms, your collaboration platforms. All of these are necessary applications to have for your workplace, whether people are working from home. They all have workflow and automation. Talk to your vendors about what type of automation is included that will save you time and money. Budget for 2.5% salary increases this year, according to Korn Ferry. Reassess those overtime workers again. If the limit goes up to $47,000, then maybe you pay them $47,010. So you're not, they're not eligible for the overtime incentives, or maybe you convert them to hourly, but you've got to have an assessment and a strategy for your overtime workers. Tell your members to pay for a safety review. Like I told you earlier, there's going to be a lot of attention being played on workplace safety, a lot more money coming to OSHA. Have your members talk to their insurance companies or hire an outside consultant. Make sure that their business is safe, not only for COVID, but if they're a manufacturing distribution of a warehouse, make sure they're on top of all those safety things. And finally, get outside HR consulting help. This is the time of the employee. They're driving it now. We know there's a lot of workplace issues. There's sexual discrimination. There's harassment. There's gender issues. There's, workplace bullying issues. There's drugs in the workplace, issues. All of this kind of stuff is out there right now. And I know that for many of your smaller members, and maybe perhaps you as well, very tough to keep up on all of that. I have a lot of clients that are hiring independent HR consultants. Find them on the SHRM site or follow them on LinkedIn. Find somebody independent to review everything that you're doing and make recommendations. You do not want to be the subject of lawsuits because of something that you're doing with the best of intentions that just turn out wrong, okay? And finally, of course, you want to revisit your employee benefits. Now, when we talk about revisiting your employee benefits, and by the way, you're not falling asleep now, though, right? I still got you. I got about like 15, 20 minutes to go, right? Okay, fine. All right. Well, this is the most important discussion we're going to have. It's having the right kinds of benefits to attract the best employees for your business. What could be more important than that? Well, let me share with you the 7 hottest benefits that my clients are providing to their employees that you've got to consider so that you have the ability to hire people, away from the potential competition that are out there. So number one, of course, there's healthcare. Everybody needs to have healthcare plans. I'm sure you've got one. Just make sure that you have health savings accounts if you've got a high deductible healthcare plan. HSAs are like a 401k for your healthcare. Very, very popular among employees. A great tool to offer to potential employees. Consider health reimbursement accounts. Those, you can set that up as a separate arrangement where you can then pay employees to go buy their insurance somewhere else, but they still get a tax benefit for doing so, and you get a deduction for doing it. So it's healthcare reimbursement arrangements. You want to look into that as well this year. Take advantage of the Secure Act, please. That passed in 2019, went into effect in 2020, and then got overlooked by a lot of people. This gives you a $5,000 tax credit for setting up a 401k plan. And it also gives you tax credits for just making your existing 401k plan automatic enrollment. So it's like easy money that your customers or your members can get by setting up a 401k plan or expanding the use of their existing 401k plan, all using through the Secure Act. So that's another big hot benefit this year. Retirement benefits, very, very important. Working from anywhere and working from home, I don't think I need to say anything more other than the fact then, guys, the millennials were right? They've been demanding work from home and flexibility and mobility for years, and we've been ignoring them. I mean, how dare these people want to spend more time with their families, right? Well, they were right all along. COVID came along. We were forced to send everybody home. It worked. Working from home, working from anywhere policies are now a required benefit for all employers. If you don't have a policy or make it available to your employees, you are not going to attract good employees to your business. Unlimited PTO is another thing to consider. Now, don't laugh and certainly don't turn off the computer here. Let me just make a case for unlimited PTO. I'm going to give you 3 reasons why you might want to consider it. Number 1 is that it is very strongly in demand from a lot of employees. People love to hear the fact that an employer has an unlimited PTO plan. So by you offering an unlimited PTO plan, it's an opportunity for you to attract people to your company in a very tight labor market. Here's the thing though. Number 2 is that when companies have unlimited PTO plans, studies have found that employees take up to 15% less time off when there's an unlimited PTO plan in place. It's something to do with psychology. They just think like, I don't know, if they're forced to take the days off, they take it. If they're not forced to take the days off, they feel self-conscious about doing it. So it literally costs you less. And number 3 is this. If any employee leaves your company and you have an unlimited PTO plan, 3 court cases have found that you do not have to pay that employee for unused vacation. How would you pay them anyway? How do you even calculate unused vacation on an unlimited PTO plan? Now remember, your unlimited PTO plans, you can still make them subject to a supervisor's approval. So you've got control over them. And you don't have to offer unlimited PTO to everybody. You can be saying, we have an unlimited PTO plan for employees that have been with us more than 5 years or more than 3 years. It's just an added great benefit that you can put in under complete control that literally saves you money and is a great enticement to hire more people. Student debt assistance. Not sure if you're aware of this or not, but like our country is being buried under student loans. Well, many employers are providing student debt assistance. This year, up until the end of the year, thanks to the stimulus programs, if you pay up to $5,200 in student debt for your employees to help them pay down their student debt, you get a tax deduction for it, and the employees, they don't get taxed for it. That's just this year, and then it expires. So that's a big benefit. Congress is looking into doing more. Even if there is no legislation, student debt assistance is a great benefit to provide, even if it's $1,000 or $2,000. Tuition.io is a great platform to help you do just that. Team building apps are very popular to help people like share information and award each other points. Bonusly is an app that I like to recommend. And same day pay is the final one. I know, again, this is mostly for companies with hourly employees, so it might not necessarily be for you, but for your members that have a lot of hourly employees, same day pay means they get paid like maybe 50% of their salary on the day that they work and the other 50% 2 weeks later in your pay period. And before you roll your eyes, I mean, you pay your babysitter when the services are performed, right? Or you pay your person that mows your lawn. Now that trend is moving towards hourly workers. And if you've got the cash flow, if your members have the cash flow to support it, it could make the difference to attract somebody valuable to your company that wouldn't normally work for your company. So these are all like hot benefits this year that you should be considering offering. It's a very tight labor market. We're not going to be seeing that loosen up until later on in the fall. So you're going to talk to your members like, guys, what can you do to attract good employees? Consider offering a combination of these benefits, and that at least gives you a good fighting chance. Okay, so true or false? Overtime wages will likely increase soon. Is that true? False? It is true. Look to see that overtime limit go from about 35,000 to about 47,000 sometime in the next year or so. And that is going to increase costs for the employers that have people within those salaries ranges. So if it's you, or if that's your members, that's some good financial advice you can provide. True or false, you can qualify for an employee retention tax credit if your revenue in any quarter is 20% less than the same quarter in 2019. The answer to this is true. It is yes. I didn't mention that as detail, but if you just had a 20% loss in revenue in 2021 in any quarter versus the same quarter in 2019, you are eligible. Remember, that's in addition to just being, affected or partially closed down, sending your workers home. If any of these, if you were partially closed down, fully affected, or just 20% off in revenue, you're eligible for this tax credit, which is a giant tax credit that can benefit your business or your members. True or false, the work opportunity tax credit expires this year? It's actually false. It expires in 2025. It was extended by a latest stimulus bill. True or false, younger employees don't need help with paying back student loans? Okay, we know that's false. That is a great benefit to provide, even if it's a couple $1,000 a year. True or false, the American Institute of CPAs provides free accommodations for any homeless accountant? Turns out it's false. They live in tax shelters. See, we're talking taxes, so I figured I'd kind of sneak in a tax joke there. Get it? They live in tax shelters. Okay, fine. And true or false, this woman also desires flexibility and independence. Of course, I'm not sure her boyfriend agreed with that, but okay, right, fine. And finally, true or false, there is a dog hiding in this leaf pile. Turns out it's true, and if you don't believe me, there he is. All right, so have a few good metrics. Have a couple of good economists that you're following as well. Budget for higher labor costs, like these are going up in the next couple of years. Leverage those tax credits that are out there that I mentioned. The Employee Retention Tax Credit, the Families First Coronavirus Relief Act tax credit, the COBRA tax credit, the Work Opportunity Tax Credit, and revisit your HR benefits, HSAs, HRAs, unlimited paid time off, work from anywhere, tuition reimbursement, team building, same-day pay. These are all hot benefits in 2021. Recommend these to your members as well. Okay, in the final 10 minutes or so that I have for you, let me just share with you just some advice. Again, financial advisor to financial advisor, okay? We as business owners need your help. And the help that we need is we don't want to be stuck in the same situation that we had before. And the way to resolve that is I realize you can't plan in advance for a global pandemic, okay? I get that. But too many of your members are not doing any planning in advance at all. Please help them with cash flow, right? Help them plan out what's going on in advance. Tell them that they need 6 months of cash available in their businesses. 6 months. I used to get yelled at for saying that companies need 6 months of cash available. Nobody's yelling at me now. That should be the bottom number that's there. And by the way, that's cash and lines of credit that you might be providing. Help them prepare 90-day forecasts. This is something that so many of my clients don't do, and it's really not that difficult to do, particularly for a small business. I mean, taking a spreadsheet where you take your year-to-date income, your P&L, you know what your 90 days expenses are going to be. You know what your overhead is. You know what your payroll is. You know if you can look ahead for any extraordinary expenses, tax payments or debt payments that need to be made over the next 90 days. The trick is figuring out revenues over the next 90 days. But come on, we've got a history of revenues. We've got salespeople that are out there. We've got open quotes. We've got a pipeline report. Just a little bit of thinking and a little bit of conversation, maybe an hour or two, once a quarter even, will help your members better forecast out their cash for the next 90 days. And I'm telling you, as a business owner, we don't like surprises. So if we know what's coming, we can plan around that. And it is an amazing service that somebody at a credit union like yourself can provide. And finally, I don't know if your credit union is offering small business association loans, but please, if you are, remind your members and prospective members that they can get an SBA 7A or 504 loan and get the first 3 months fully forgiven before any loans that are given between now and the middle of September, thanks to a previous stimulus act. 3 months fully forgiven. And any of your members that have an existing SBA 7A or 504 loan can get their 3 months also forgiven as well. So it's a huge benefit and a way to maybe attract new members into your business, but it will certainly help your existing members with their cash flow. Finance acquisitions. We are seeing a huge uptick in M&A activity among small and medium-sized businesses. And it really should come as no surprise, right? I mean, there's a lot of changing demographics. There is a huge amount of people that are going to be over, baby boomers that are over the age of 60, 65. And this pandemic put a lot of us over the edge. We're like, we've had it. We want out. We want to sell. Meanwhile, those millennials that I talked about, they've been around for a while. Millennials are in their 30s, even, right? They've been in the business world for 10, 15 years, and a lot of them are looking to be their own entrepreneurs. And what better way to be your own entrepreneurs than buying an existing business? Well, that's opportunity. Now, there's low inflation right now and low interest rates, so it's a great time to finance big business acquisitions. Even those SBA loans can help finance a business acquisition. There's looming capital gains tax changes that are out there, which is spurring a lot of people to make those sales now to avoid those capital gains increases. And finally, there's been a dramatic increase in the interest of employee stock ownership plans. They need credit unions. They need financiers to finance these plans. And the reason why is because there's a lot of business owners in remote parts of the country, not necessarily New York or San Francisco, nice places like Omaha and Nashville. And maybe they can't attract the buyers that they want to their areas, so they're selling their businesses to their employees. That's an opportunity for credit unions. And then, of course, there's infrastructure money. We're looking at anywhere from $1 to $1.5 trillion being spent on an infrastructure bill. And there will be an infrastructure bill. There is bipartisan agreement on getting this done. We're just got to figure out how much is going to be spent. But those are the future members for you, the people that are in the infrastructure industries that are going to be looking for financing and looking for financial advice as well. And then, of course, staying ahead of inflation. All right, so we'll wrap things up, guys, right? True or false, there's 3 months forgiveness on new SBA loans. Yes, that is absolutely true. There is 3 months forgiveness on new SBA loans for, if you 7A or 504 loans, that's what qualifies. If you have members and if you're an SBA lender, please reach out to them to help them with these SBA loans. It is a great, great incentive and a great way to attract new members to your credit union. True or false, a rapidly aging demographic is spurring more sales of businesses. That is true, as well as low interest, low inflation, capital gains on its way. There's a lot of things that are pushing business owners to sell, and you've got a lot of younger people out there that are looking to buy. Another opportunity for credit unions this year. And true or false, there's really nothing sweeter than the two loving sisters sharing a birthday celebration. It's absolutely adorable. By the way, watch this little girl. She goes in for a second try, which is also kind of my favorite part of that video. Okay. And finally, true or false, do you believe this? How many Europeans, are conceived in an IKEA bed? Well, according to the New York Times on IKEA, it's 1 in 10 are conceived actually in an IKEA bed. And finally, true or false, according to the Journal of Microbiology, 80% of fast food drink dispensers contain fecal matter. Don't worry, it's false. It's only 50%, according to the Journal of Microbiology. I know a lot of people get concerned when they hear 80%, but it's only 50%. So here's our wrap up, right? You want to follow metrics that are based on real-time data, weekly, monthly, and daily. These are the ones that I follow. I'm following now to track the recovery, and I continue to follow them after the recovery to see when the next downturn is going to happen. I follow some good economists as well. You should do that as well. Sign up for their newsletters. They will keep you up to date on what's going on. This is the kind of financial advice you want to be providing to your members. That's me, your member. Budget for higher labor costs. They are coming. Increase in minimum wages, increase in overtime wages, increase in OSHA expenses as well for some of your members. These are all things that you need to be aware of, as well as some other things. It is going to be a little bit more of a regulatory environment for labor over the next couple of years. Leverage those tax benefits. Remember, the ERTC, FFCRA, those are 2 tax credits and COBRA that impact your payroll taxes. So that's you. Okay, I know, forget about the income taxes. That's you and your members. The work opportunity tax credit affects your members. So, these are all incredible tax credits that expire this year, with the exception of the work opportunity tax credit, which expires in 2025. Revisit those HR benefits. We need all the help that we can get to attract good people and retain people in our business. And these are the benefits that people are providing. And maximize those opportunities that I discussed with you guys, okay? Advise me on my cash flow, please. Help me with those new SBA loans, which has forgiveness. Finance my acquisitions. Go after infrastructure-related companies and help us take steps to stay ahead of inflation. So this is my latest book, just came out a few weeks ago on Amazon called Want More Cash. Feel free, you can maybe offer it up to your members as well. It's 100 ideas and strategies for increasing your cash flow this year. So guys, true or false, you're much smarter than you were a mere 60 minutes ago. I can't hear you, but I'm going to assume it's true. That is my email address. Please email me if you'd like a copy of this PDF. I know there's a lot of stuff in it. Or if you'd like to just ask me questions about any of the things I talked about, I am more than happy to discuss it over email. So by all means, please reach out. So my name is Gene Marks. Again, thank you very much for spending the time with me. Joe, I guess it's time, or John.